fundamentals for for seeing the big picture, and technical for entry points. Some people, I'm not the only one that does it. Basically, a stronger economy has a rising value of its currency, and the lower bad economy has a weaker one, as this nice image shows. But it's not always that simple. Let's see. Currently, QE, quantitative easing, I'm sure you've heard this term, is the main focus of markets. If the Federal Reserve prints more dollars, then the dollar weakens, and if it prints less, the dollar strengthens. And jobs have a major role in determining if the Fed will buy more or less, if the Fed will taper or not. Before the global financial crisis, inflation had a much stronger role. Nowadays, central banks ignore inflation, or not totally ignore, but put it on the back burner. We see that in the UK as well. Okay, let's start with the first point, understanding what is priced in. Basically, you can look at FX Rate's calendar. It's also available on Forex Crunch. See what the consensus of economists is. Here's one example, screenshot from the calendar. Of course, there are some differences. Some calendars will show different numbers than others, but basically it's around the same numbers. And this is the first thing you should look at, understanding what figures priced in. So in this case, that was the ISM manufacturing PMI, a score of 51.5 points was expected. But it's not only that. Let's see. Another thing here, just before we move on, you can see some events are more important than others. In this case, the ISM manufacturing PMI is more important than construction spending. Now, it's not only the consensus, and if the figure is above the consensus or under the consensus, sometimes we have rumors. People whisper, and these rumors go through trading rooms. They're available sometimes they become public on the web, but it's not always the case. Not all rumors are true. Sometimes it's false data. Rumors are more common with the UK data, especially PMIs, but not only that. But again, not all rumors are true or false. And also in China's case, some data leaks out. And there are some unexpected news events like credit rating downgrades. We've seen that for various European countries and also for the US. And in many cases, these rumors prove to be correct. The historic downgrade of the US by S&P back in August 2011 was rumored, was released after the markets closed, but everybody was talking about it before the markets closed on that Friday in August. And also I think the Italian or Spanish downgrades were also rumored quite strongly. So sometimes the rumors overtake the initial consensus. And, you have to be aware of that as well. Another thing is what is priced in. Sometimes the consensus is one number, but figures change. The best example is, of course, the king of Forex, non-farm payrolls. For instance, beginning of August, we had a consensus of 180K, but then the ADP non-farm payrolls released on Wednesday, 2 days before the non-farm payrolls exceeded expectations, and also the non-manufacturing PMI and its employment component, and also jobless claims. So the real expectations weren't the ones seen on all the calendars, no matter which calendar you use, weren't 180, but were more like 200. So when the actual figure eventually was only 162K of job gains in the United States in July, the figure was released in early August, then it was, of course, a bigger disappointment. If we think about it, the difference between 180 and 162 isn't that big. You can call it within expectations, but If the real expectations due to the hints are above 200K, then it's already a bigger disappointment. So in these big events, you have to be a bit more aware of the build-up, the hints, the other figures leading up to the release. Another thing in understanding what is priced in is looking at the price action typo here. It's just 1 hour towards the release. The price action can reflect rumors, real expectations. In the case of UK figures, you can see the pound strengthening or weakening in 1 hour before the release. That shows the real expectations and what is actually priced in. And the same goes with hints. It also means that the reaction to the news will be powerful. But so it means it's an important event and the market is making a build-up towards the event. But the point we'll reach at the end, it can lead to a buy the rumor, sell the fact response. So sometimes you can see the dollar strengthening, or let's take the UK example. Sometimes you can see pound dollar strengthening before a good release, and you know there will be a powerful reaction afterwards. It might be an extension of this gain, but it might be a fall immediately afterwards. But we'll talk about it at the end. Okay. And second point is identifying currency strength or weakness. You can, if you're not in the market and you don't intend to trade this specific news event, just look at the market reaction, what happens around this event. It can be quite telling about the atmosphere in the markets and what's going on. So if a weak currency falls on a marginal miss or makes a dead cat bounce on good data, it shows that it's weak. What does it mean? For instance, we have expectations for, well, I think today was not so bad example with the euro. The ZU expectations from Germany was released. It exceeded expectations. It was strong. All the subcomponents, the comments around it were strong. But the euro dollar just made a dead cat bounce. If you're not familiar with the term, when you throw a dead cat on the floor, it also bounces. It means the euro dollar went up a bit but didn't go too far. This showed that euro was relatively weak, and consequently, when we received US data later on, trading proceeded throughout the day, the euro fell. So we got so the weak reaction to a strong figure in this case, strong figure from Germany, very small rise in euro dollar, indicated that the euro was a bit weak, and then it fell against the dollar and also against the pound. Or another, I don't have a recent example, but if we have a weak figure, but it's not really very weak, it's just very close, and you see a currency falling sharply, that means that the currency is quite weak as well. Moving to the other side of this equation, when a strong currency jumps on a minor improvement or doesn't crash on bad data, it shows that it's strong. We can see that actually today with the US dollar. The surprise in the retail sales figure wasn't that big. I think the headline figure was within consensus and the core figure was 0.1% above consensus. It's not such a big surprise, but the dollar reacted quite strongly. It showed the strength, and the strength, was seen further on. The dollar kept on strengthening later on. So you can see what the feeling in the market is according to reactions to news, to indicators.